Hello guys. Welcome to our 115th edition of the Trading Opportunities webinar. This is Nirav, and before we proceed, I'm just checking the audio at my end. If you can hear it very well, let me know in the comments. Hello, Martin. Yes, it looks to be working. Hello, Martin. Hello, Sandeepan. Yes, here I am finally. Before proceeding, let me just give you a very quick introduction, guys. This is our Trading Opportunities Webinar 115th edition. My name is Nirav. I'm the admin and owner of 50 Eyes Market Analysis website, YouTube channel, where we are broadcasting this live alongside our LinkedIn page. You can check the link in the description. And before proceeding with the new edition, there is 115th edition. Just a quick mention that we have captured 278 trades in our last 114th webinars, including 5 setups. We just discussed 6 markets, so 5 worked out from our last discussion, which is, by the way, a series. In the last to last 113th edition, we had 5 captures as well from the 112th webinars discussion. I think 5 setups were discussed in 112th, all worked out here. So these are currently broadcasted for free, but you can see the value. And if you do, I would appreciate you furthering our cause, getting more people to join us. Yes. Thank you for the confirmation there, Martin. And let's now begin with our, what do you call, actually, I still missed the introduction part. Yes, before we proceed, I always like to show off our past track record, which is since 2016 when I started this YouTube channel. I have kept a record of whatever I said, and you can see the accuracy has remained higher than 80% all these years. Over the years, we have tracked various different instruments. As you can see here, we were tracking crude, gold, BTC, S&P, Nifty, Reliance, some NSE stocks, some Nasdaq stocks, etc., are also tracked. Time to time, different indexes, etc., are also tracked. So this is all just stuff that I've been doing over the years, and as you can see, we have accuracy for 6 consecutive years, higher than 80%, beating all industry standards, and actually all done in front of you guys, so completely transparent. Since 2022, we started doing the Trading Opportunities webinar series, where, as I just mentioned, we have captured 278 trades in our last 114 webinars. Right, so that is for our past track record and accuracy. One thing to quickly mention, I have a video course, like what do you call, I mean, this is the main course we have here. This is a paid course with 1600 plus students, but I will soon provide a link in the description for a small video course which you can go through for free without any registration, so that if you just want to go through the webinar and get a quick grasp of what I'm saying, and if you are completely new to Elliott Wave, you can do that. I highly recommend going through the paid course, but as I said, if you don't want to, you just want to get a quick grasp of things going on, I'll provide the link in the video description later on. Just didn't have the time to do it right away at the start of this webinar. So I've been pointed out by some people that things I discuss are not, I mean, they are advanced stuff. So the audience may need some, what do you call, a little bit of guideline or a sort of small course. So it will soon be provided. And with that being said, here is the format for those of you who are joining us live for the first time. We will go over the chart of euro, followed by crude, gold, S&P, Nifty, and eventually we'll discuss BTC or Bitcoin. And let's now start with the webinar. So first of all, we will check the discussion done in the last webinar on the chart of euro USD. And after that, we will go over the actual current market data or the chart. So here's the chart of Euro USD as discussed in our last webinar, the 114th webinar conducted 6 days ago. That is on 10th. It was conducted on 10th, basically. This was our analysis. We were expecting upward movement for wave C. Excuse me. I was holding longs on this counter, and at the time of the discussion in this webinar, and I did book the profits because it did go up. Let me just quickly play the recording for a second just for context. By the way, keep in mind this is a discussion from 4 hour time frame or a higher time frame. So things that we discuss now will be on a lower time frame. There will be a sudden shift in counts analysis. That will be that. Anyways, you can check the whole thing from 5 minute to whatever. I'm not gonna play the whole thing. Obviously, the whole point is that we were looking for longs, and this is the count zigzag up for wave C. And here's the actual chart on screen now. So this is the chart of euro, and what we discussed in the last webinar was this expectation of leg up for wave C still seems to be continuing and still in play. But what I would like to focus is on a little bit lower time frame here. What we do have here is a formation of a possible diagonal structure. From this point of reference around 1.05998, we have what may seem like a diagonal structure in play. I'm saying seem like because it does not really fit all the guidelines which I expect to be seen in a diagonal, right? Basis on that, I have taken a minor short position. I'm not very hopeful about it because, as I said, it does not seem to be fitting all the guidelines of the diagonal. But if it does seem to work out, it will look something like this. Basically, we will expect a zigzag kind of correction. A zigzag, those new to Elliott Wave, is a formation which looks like this: A down, B up, and C down, right? And if it does not work out, I will look to reverse my short position to longs above 1.0885 to something with full strength. Right now, the position is very small. I'm just testing the market with some small money. So that's about it for my setup on euro. Just for context of higher time frame analysis, we are expecting that if the market sustains above this red channel line, then it is expected to be extremely bullish or strong. And as you can see, the market has already gone up the red channel line. So we are expecting itself a zigzag correction anyways. So that's why there's a secondary reason why I am having some short positions on euro. I was able to catch it somewhere here, I believe, quite early on. But anyways, that's about it. Minor shorts with the expectation to either book profits on the shorts or reverse to longs above 1.088. Right. That's about it for our discussion on euro. If you guys have any doubts or questions, you can just post them in the comments. Let me just get through the comments which we have so far. Hello, Sandeepan and Martin, and good morning to you, Luis. And what about the other participants? If you guys are live with me, do not forget to say hi. Okay, with that being said, let's now head over to our next chart, which will be the chart of crude oil. First of all, let's just quickly discuss what was being said about this in the last webinar. So here's the recording for last webinar on crude oil. We were discussing that, where was it? Let me just go to that part. Yes, there is the recording. So I had a minor long position up in crude oil, and my stop loss was later on hit. The analysis was that this is a short-term corrective structure to the upside, A up, B down, and C up. I had minor positions because when you are trading a counter trend move, specifically in the last leg, it's not very wise to trade a big position size. So what happened was the market actually, I think, fell down straight from here, something like that. We'll check on the chart later on. Basically, long story short, the wave C was completed much before our expectation, somewhere here. We will see on the real chart in a moment. And the market later on went down. So it was not as per our, I mean, the market did not go as per the forecast, but overall analysis of the character structure in C, etc., it was as per our liking. So let's see on the live chart. Here is the chart of CL. Here is the discussion from our last webinar. 10th May was when we were doing the last webinar. Somewhere here we were discussing and we were expecting that some upside can be seen for wave C. It can go to 80-ish levels. So as it happened, the market did complete the C right here itself, which is around 80.22-ish levels, right? And then the market fell down, and of course, I was short on the market. Here is a quick glance into our private Slack group's post here. One second. Hmm. Where is that expected progression? I did shorts, I did more shorts, Forex, something, something. Yes, there it is. May 13th, I did minor shorts and then I built up on the position. By the way, this is, let me just open the chart here. This is where we were expecting upside. Didn't work out, hit my stop somewhere here, and then I added shorts here because at this point we had more clarity and conviction where the market is going, right? Then the market went down and I added more shorts and expected alternate possibility, blah, blah, blah. And here I exited the shorts around 77-ish levels. Right. So it was all posted live along with obviously the other trades which I took over the week. It was a good week, by the way. So now what is the market doing? We expect that this impulse may have completed. What is an impulse? Let me just show you here in the empty region in this box. What we expect is that this market has given us a 1, 2, 3, 4, 5 leg down movement. And this is your first complete here, second complete here, third complete here, and once the fifth is complete we expect a corrective structure in the upward direction. So there are two possibilities here. It is possible that the fifth is not completely over and this market may have some more downside remaining, but my belief is that if this market goes and trades above 80.44, then there's a high chance that the fifth can be considered over, and at that point I can at least look for short term longs. What do I mean by short term longs? Whenever an impulse is complete, despite of the higher time frame analysis, which will give us more insights, but I'm not really interested in at this point. Despite what the higher time frame analysis is, we will at least get a corrective structure in the other direction. Could be a flat, could be a zigzag. In this case, we are expecting something like this: an A up, a B down, and C up. So basically, my point is that above 80.44, we expect that there might be a wave A here, some correction may be expected for B, and there might be some lag up for C remaining. Will it become an higher time frame upward movement, that is an impulse in the other direction or not, remains to be seen. Something that I cannot comment on at this point in time. But so far, that is our take on CL. I will wait for short-term long opportunities above 80.44 with this rough idea in mind, right? And downside possibilities, while they still do exist, we are not interested in them very much. Somewhere below 77.5, maybe we'll be interested. But overall, short-term bullishness remains in crude oil. Right. So that's about it for my discussion on CL. If you guys have any questions, doubt, you can just post them in the comments while I take a quick look at what is being posted so far. And hello, Sushil. Nice to see you here as well. We captured all the down move. Must get a great edge. So Sushil, by the way, for context, is in our Slack group and was also in the trade with me. So thank you for letting our audience know. And here is a comment from Conrad. Thank you for the previous analysis. Went buy had made so much profit this week because of the last week's analysis. Thank you. Thank you very much for letting our viewers know that, Conrad. Right. And Sandeepan is asking, can we go short? Keep in mind, Sandeepan, I never recommend what you can or cannot do. What you can or cannot do is up to you. I just tell you what my analysis looks like and what my trade is if I'm in a trade. And keep in mind, my analysis can change in moments, like just in after 1 second, I say that this is my analysis. It actually did happen here, right? You guys remember last week we were discussing more upside on crude, but later on I actually went short myself as I shared with you the whole outlook on my trades and posted in Slack. right? So never ask me what you should do. You decide what you want to do. You decide your own future, right? Oh, that's not what I wanted to do. One second. Yeah, there it is. So yes, guys, I think that's about it for. There's one more comment I'm missing here. Pain of missing the Slack group trades. Martin, there is no pain. You can join in, right? You have already gone through the video course. There is no additional requirement. And yes, guys, as I mentioned at the beginning part of this webinar, I will leave a link for the free small course which I have on Elliott Wave. I do recommend going through the paid course, but if you do not want to do that and just want to get a context of how we discuss things, the link for the free course will be available in the description of the YouTube video, and it will not require any registration or anything at all. You just click on it and watch the stuff. Probably about 1 hour or so of content. So yes, that's about it for our discussions on WTI's crude oil. Let's see how things go, right? And now let's head over to our next chart without wasting any further time, which will be the chart of gold. Gold. Exceptional movements. Well, rather than me just saying it, let's now first quickly check the recordings from our last webinar. What exceptional moments did we catch? What am I talking about? So here it is, the recording from our last webinar. Let's discuss, or let's check what was discussed on gold. Somewhere over here. Okay, so if you guys do recall, we were able to pinpoint the entire up move, this whole reversal over here, and that was done in a live webinar. And I think it was 112th, I guess. You guys may know better, but I think in 112th webinar we discussed the whole reversal, that the whole theory that why I think this market has completed a correction here and why I think it will go up. Not only that, I was holding longs since this region. Let me just zoom in for context. So I was holding longs since I just got an alert. 1 second, guys. Okay, it is on gold. So it is just making newer highs. My stop is currently here. Let's just get back to the recording for a second here, for a moment here. So as I was mentioning, I was holding long since this region around 2300-ish something-ish levels. And our stop loss was placed around 2350-ish levels something. I don't exactly remember. The idea was that we were expecting a wave 4 correction and then another leg up. There were two themes. Either I could book the profits and then re-enter when the market completes the fourth correction, or I could let the thing run. I had a trailing stop loss around 2350-ish levels, roughly speaking. Right. So later on after the webinar, I decided to exit out of the position and book the profits, because this was, as you can see, substantial movement around 2300 to 2360-ish levels. I think I was able to make roughly 50 points or something on this move. And that is, in my own personal opinion, quite good. Actually, brilliant. That's a huge profit if you are trading gold because of the lot sizes. So anyways, what happened is market did go in a correction and then went up. I entered longs again. Of course, that's what I had to do. But it did not go in the correction as we expected. It was not a fourth wave correction. But again, that's the nature of the market. That's the nature of counts. As the market provides us new information, new counts come to light, and our trades also change accordingly. Our trading plans change accordingly, as I must say. So before moving forward, I'm just quickly checking one thing. Wait for a moment here, guys. Yes, there it is. So, okay, now let's head over to the actual chart and see what is going on right now. Right now, the market is around 2406, and here is the entry I took longs, re-entered on 15th May. Price is 2368, right? And I'm still holding it. Later on updates, etc., etc. So 2368 is the price of entry. So somewhere here. Not the most brilliant entry, I would say, but still good enough. Stop loss currently is, I think, around, let me check, 2382. So we have a free trade in play. Just in case you don't know, free trade basically means whatever really happens here, even if the stop loss is hit, I will make something out of it. And if I keep trailing it, we can just ride the thing if it goes up in a strong trend. That's about it for my trade. Let's now see what is really happening here. One second. So let's just see what is really happening here on this chart right now. So two things are possible. First is, if this is the end of the move. Are you guys able to hear me? I seem to have some issue at my end of, okay, the comments are loading now. Yes. So as I was saying, there is the point of reference price level is 2277, right? And from here on, what we have to the upside is, my main count is that we are looking at an impulse in the upward direction. Thank you for the confirmation, Martin. So if there is an impulse in the upward direction, wave 1 up, 2 down, and then you can get the idea. We can just count this whole thing as a continuation of 3. For those of you who are new here, what I'm talking about is the fractal nature of Elliott wave. That is, if there is a impulse in the upward direction, then the 1, the 3, and the 5 will have 5 waves inside of it as well, right? So in this case, we expect that this 3 is possibly continuing. That's the super bullish count we have. And that is one reason I want to continue holding the longs with a trail here, right? That way I have a chance of seeing luck play out literally, right? And if it doesn't, then who cares? I already have made about 20 something points, or I think lesser. But anyways, the whole point is that there is a possibility that this can lead to a strong uptrend, or what you call strong bullish movement. However, I personally am not very optimistic. There is a possibility, alternate view. Let me just show you that this whole thing is just a corrective continuation, and by corrective continuation, I mean that this box range is a range in which this price can just propagate up and down and up and down. So that basically means it can just go to the upside, maybe give a false break, come back and hit my stop loss, and then maybe go up again, come back again. So you get my point, right? And I personally think that that is the main count here. That is, this thing can just keep propagating within this sideways range, which is currently standing around 2430 to 2276. And as I mentioned, the upside can give a false break as well. So what can we do in a situation like this? Well, the only thing to be done in a situation like this is to be in the longs from a lower level and keep trailing it as it goes up, which I currently have. I was long from here to here, somewhere here. I think somewhere here, yes, and then I'm long again some from where here. So what I would like to do is keep trailing this thing, and if it tests the upside of the range, let's say it goes up, I'll move my stop loss a little bit up and a little bit up. If it is a wave 3, then no issue, because wave 3s are known to be exceptionally fast and strong. Then the trail should not hit anyways. But if it's not a wave 3, I would like to make as much profit as possible, right? So long story short, if there are longs being held from lower levels, trail them, right? And if they are not held from any lower levels, then it's a bit of a tricky one. I can't say that we have new long entries at this point. And yes, if you are not following now, you should get the context. It is important that you follow every single webinar in sequence. There are methods and setups which develop week on week, and if you miss it, you miss this kind of opportunity. For instance, if it goes up and continues going up as a wave 3, then there is no way to get a proper entry now. It won't even give a proper pullback. Anyways, long story short, that's my analysis for gold. Nothing much to add. I don't think there will be any doubts on it. But if there are, you can just post them in, and I'll just move to the next chart of S&P's 500. which will be followed by Nifty and then followed by Bitcoin. And yes, guys, before I move to our next analysis, I have a request as always. If you are liking the content, if you have been following these streams, you already know that our audience is always not as much as expected. So your contribution is needed. Kindly make sure you share the stuff after this webinar is complete. Share it with your friends, colleagues who are in trading. Share it in the trading groups you are a member of, in your Slack or WhatsApp or Discord or whatever you use for accessing trading groups or whatever, right? But kindly do your part. Make sure that you have reaching at least 4 or 5 shares. If you can make, we can reach enough audience to make these webinars more sustainable, right? So that's about it for the small request. Let's now head over to our chart of S&P, and here is the quick recording from our last live stream. And let's see what was being discussed on S&P in our last stream. Let me just let it play out. Yes. So this is our discussion from the last webinar on S&P's 500. We were expecting an upward movement after a wave 4 correction, and mind you not, it literally gave a correction for wave 4 and then went up. Picture perfect analysis played out here. Again, as you may guess, we were trading this stuff and down, up. I had multiple trades on S&P, by the way. Yeah, there is the last long trade we had taken. Stop loss was trailed to 5243 before it went up for wave 5. Right, so these were all posted live in our Slack group. But before we discuss that, I think we should now head over to the actual chart and show what happened. So guys, this is the last webinar's discussion done on 10th of May. Right here, I had pointed out that there's a wave 3 and I had made an arrow or arrows to the downside saying that we are expecting a wave 4 correction. Price was around 50 to 40. And just for context, here it is again. 50 to 23, yeah, 50 to 40. Market is reversing from 50 to 40, and I have the wave 4 correction here. Right? Can't be clearer than that. So the market literally reversed from our mark point of 50 to 40. It gave a correction, wave 4 correction, which ended here. And then an upward movement, which is all as we were discussing in our last webinar. So how hard is it to trade that when everything is mapped so clearly, huh? So anyways, here is the count on live chart. What we have so far is this. I'm currently not holding longs. I plan to re-enter after I see some clarification on this correction. I'm not feeling the wave 4 here. It does look like it is doing something else. So wait and watch for me right now, but I will be quick to jump in for new longs as soon as I get some clarity. So the count right now is 1 up, 2 down, and we are inside the wave 3 up. What we are seeing again is, as you have seen in so many of my past chart discussions, we are looking for a simple impulse up, and we are currently in the third wave of the same. So this third wave itself will have 5 waves of it within it. Or perhaps the third is complete and this is the fourth of the higher degree and the fifth. It doesn't really matter. We are still expecting one wave up, right? Point is, if the 3 is here, is continuing, it doesn't really matter. We still expect one leg up. So that will be our fifth leg. And if this count is correct, then we have 2 legs up. So long story short, I'm not holding longs because it does feel like this wave 4 is unclear. Perhaps it will go some more sideways movement because the price correction is already achieved. We were expecting correction till 5296-ish level. As you can see, market has taken support literally at that level. So I'm just waiting for some clear pattern here. So trade setup here is very simple. We can just look for breakout trades above 5320-ish levels. Is a long entry for me, at least as per the data I have right now on screen. If the market goes sideways, gives some more clarity on the pattern of the waveform, perhaps I'll get some more earlier entries. But so far, it's just a breakout trade above 52, 53, 30, 21. Nothing much to add here. That's my outlook on this. And by the way, you guys who are attending the webinars regularly, how many of you were able to watch the last one, grasp the analysis on S&P's 500, and perhaps even trade it? If you were, then kindly do let our audience know. I think Sandeepan was there, Martin was there, and others who were there. Do let us know if you were able to catch it. Right. So, anyways, that was our answer on S&P. Lastly, we will now move on to our Nifty chart, which will be then followed by Bitcoin. Nifty was again one of those analyses which did play out as per expectation. Our idea in Nifty was that we were expecting upward movement above the channel. And for context, let me just one second. Let me just bring out the recording from our last webinar so that we can check what was being said. So here is the recording from our last webinar. Let's head over to Nifty chart. Yeah, there it is, Nifty. So we are right at the place where we were discussing bullish movement or bullish activity on this counter. The idea was very simple, that if we see the market sustain above this red channel, and perhaps best case scenario was that if we can see a breakout above the channel and then a retest, as you can see with this correction to the downside, this part. So that was the idea. We can see a correction back to this channel. That would have been a brilliant setup. Now let's see what happened on live chart. Here is the live chart. Here is 10th of May. Where it is? There it is, somewhere here. Yeah, 10th of May ended here. So this is where we did the discussion. And this is the channel we were looking for a breakout of. So as you can see, the market did not give a breakout right away. Next day, there was a sell-off. And then on the 13th May session, we saw the breakout. There was no pullback. So there is no exceptionally clear setup here, but pullback is just a thing we expect. If we can put a big position on. It's not a requirement. So overall, the setup did play out. We see the breakout. We see the market move up. And of course, I was posting my counts and analysis live in this market on my Slack group. And we were able to track parts of this leg up. So what is this really doing now? Right now is we are expecting a sort of minimum corrective structure from this point of reference price level of what is this, 21824. We are expecting A up, B down, C up. Now the problem is the minimum is already over within this last 5-6 days of trading or whatever you had. Yeah, actually 6 days, because we do the webinars on Friday. And today's session is closed for Nifty. So this is the minimum expectation to the upside. It's already over. So this is risk or less risky, I would say. Nothing is risk-free in trading anyways. So this was the least risk opportunity, this last leg up. And since we do the webinars only on Friday, it's already gone, right? Now, what do we expect from here? If the market is super bullish, then you can expect the market to go sideways here for a bit and then give another break, right? That is the main theme here. The counts are bullish. The outlook looks bullish, but I'm not gonna be super interested in trading Nifty for any of the impulsive counts like this. Why? Because the elections are upon us, and while it may look like an impulse, it may be something else. Who knows? Who cares? As I mentioned so many times, the better plays are stock specific plays. I think we did discuss one or two stocks for a quick moment in our last webinars as well. I'm not gonna go over that. We have captured way too many opportunities in multiple stocks. So I'm just gonna keep going intraday only on index and remaining stock specific. So the two main themes on this index chart right now is ABC possibly complete, can lead to some more corrective downside. If not, then we can see some correction sideways, then breakout. Which one is it going to take? We have no idea, and we don't really care to guess either here because of those situations. Right, that's about it for our discussion on Nifty. I don't want to talk more about it. There's nothing concrete on it anyways. So with that being said, let's now head over to our last chart, which is a chart of Bitcoin. We had a short-term setup only on Bitcoin, nothing what you call concrete either here. But let's just quickly look at what was being discussed in the last webinar and discuss the counts and updates which we see on chart right now. So here is the chart of BTC around here somewhere I was discussing. Let me see if, yes. So this was a short-term setup I discussed. The overall scenario I discussed, there were two main themes, and those were mostly swings. So let me just replay the thing. Okay, so you can check the whole thing yourselves, but our analysis basically was that short-term wise, this peak being taken out will give us a C leg up. Very simple setup. You have seen me talk about this multiple times. It did actually play out. Let's see. And 1 second, let me just show the price level around 6400 plus 6500, maybe something. So you can check the whole thing in the live webinar. I have mentioned the levels, etc., etc. I don't want to take too much time. So this was the minor setup. I made it very clear. This is a short-term long setup. If we see a break above 65,000 levels, then we can trade this part. Personally, I didn't care much for it because the brokerage and charges on BTC are very high for me to care about such small moves. But yes, for context, our analysis did play out. Now, what is the story here? Just for those of you who are joining in for the first time our webinars, we have been tracking this whole correction for quite some time, and not quite some time, like all of it, we have been tracking it. And what we have so far is two possibilities. One is we are looking for W here, perhaps an X, and then a Y. What am I really talking about here is a corrective continuation here, right? And the corrective continuation basically is, in this case, what we call it is a complex or a double zigzag specifically. In the rough area, I can draw it. It will look like this. So long story short, the market can take out this low. This possibility is not completely removed. When it does get removed is when this high is taken out. So you get my point. This is more of a wait and watch market, as the counts we have are mostly specific, very specific to our breakouts, right? These are not simple counts. These are more or less breakout counts. So that's about it for our discussion on BTC. And here is a request from Sushil. Can we add hero for the audience? Yes, we were able to capture an exceptionally big trade on Hero Moto actually. Let me see if I have the post in Slack. There are too many posts in Slack on stocks. I can just show this one here. So for context, this is just one of the trades we picked up on NSE stocks, Hero Motocorps, from 4880 each level. Actually, we were tracking it far before that. This is just the count which is recent, 4 days ago. We have been tracking Hero and taking longs since months. This whole leg we were trading it, literally. So anyways, the recent one is that we were holding, or what do you call, having bullish buys since 4880. And after that, here is the last chart. Let me just show the actual chart instead. So it is the last thing we have on Hero. It has crossed 5,000 plus levels. So I'm not super keen on discussing it in detail, just that we were able to capture all of this move. And that's just one stock. We are tracking a lot of these. So anyways, that's about it for our discussion on these charts. Thank you for sticking till the end. If you like the content, Maybe we asking too much. No, that's fine, Sushil. It's good to show off a little bit here and there to the audience. Otherwise, how would they know what we are offering in the Slack group, right? Yes, it's on Slack. Okay, so that's about it, guys. Thank you for sticking till the end. And as I said so many times, and as Martin always does, he shares my content a lot. So does Sushil and a lot of you, I believe. But I would really appreciate if all of you would do your part and share it and let us have more of an audience. Are you guys not benefiting already with such quality analysis? 5 out of 6 played out. What more are you asking? Don't be greedy, guys. Share the content, and I'll see you guys in the next one. Take care. Bye. You're welcome, Luis.